Your profit is our profit. Your loss is your loss. The following statement is being used to describe the recent development that has taken place in order to regulate something that is making its mark in the world's economy, cryptocurrency. Hello all and welcome to another video of AK Talks. Today I shall be shedding some light on the Indian crypto tax. Before we come to our main topic, let us first understand what exactly cryptocurrencies are. In simple words, cryptocurrency is the term used to define any form of medium of exchange that exists digitally or virtually, designed to buy goods and services, similarly to our other used currencies. However, since the beginning, it has largely been controversial due to its decentralized nature, which means that unlike the Indian currency or any other national currency, crypto operates without any intermediary or middleman like banks, financial institutions, or central authorities. Instead, these tasks are broadly distributed amongst the users of crypto via the internet. Even though you can use it to buy regular goods and services, most people would invest in cryptocurrencies as they would with other assets like stocks, real estate, precious metals, etc. It is important to keep in mind that while crypto is an exciting venture for current and future investors, purchasing it can be very risky, and you must take on a fair amount of research to fully understand how each system works. Today, more than 1500 virtual currencies such as Bitcoin, Ethereum, Litecoin, Dogecoin, Ripple, Matic, etc. are traded in the digital currency world. The investment and trading volume of cryptocurrencies has increased multifold since the lockdown imposed due to the coronavirus. Though there is no official data available on the size of the Indian crypto market, estimates suggest that investors vary from around 15 million to 20 million people, with holdings of about rupees 40,000 crores. As with any new industry, innovation occurs before regulation can catch up. India's tussle to try to regulate crypto goes back many years since the RBI first took notice of it in 2013. Their initial reasoning was that it poses serious threats to the nation's macroeconomic and financial stability due to the following reasons. India's rupee is only partially convertible, which gives the regulator insight and control over who can have access to the country's markets. Cryptocurrencies deny authorities both oversight and the ability to tax transactions. Issues such as money laundering and terrorism financing have been raised as well. Since then, the country has had a hot and cold type of relationship with digital currencies. In 2018, it effectively banned crypto transactions, but the Supreme Court struck down the restriction in March 2020. Calls for stricter rules have grown since then, amid concerns that an unregulated environment could make savers and investors vulnerable to a crash. After much deliberation, the government decided that it was time to formally recognize crypto trading, but at the same time discourage it by imposing stiff levy on all transactions. On Tuesday, the 1st of February 2022, India's Finance Minister Nirmala Sitharaman announced the union budget for the upcoming fiscal year. During the speech, she made two major crypto-related announcements. The first announcement was that the government intends to levy a 30% tax on any income generated from crypto transactions and a second tax of 1% at source on all transactions. The second announcement was in regard to the government's intent to introduce a digital rupee within the end of the financial year. In order to get a better understanding of what the tax means, let's break the figures down. Suppose you buy Bitcoin worth rupees 1 lakh. Within a few months, upon selling the currency, you get a net profit of rupees 50,000. However, you will not be receiving the whole amount, but the profit gained after the 30% tax is deducted. Therefore, your profit will be around rupees 35,000. When talking about the TDS, imagine that you buy Bitcoin worth rupees 1 lakh. Within 1 month, the value of that Bitcoin drops to rupees 50,000. You withdraw from the Bitcoin, booking a loss of rupees 50,000 because you don't expect it to recover soon and you want to cut your losses. Instead of rupees 50,000, you will get back rupees 49,500 after 1% tax is deducted at source. It doesn't matter whether you make a profit or loss, TDS will be deducted at the time of redemption. This tax will affect the way crypto is being traded in many ways. For example, it will legally force crypto traders to file income tax returns even if they make 1 rupee in profits. The crypto traders will not be allowed to offset their losses from the market, which means that they cannot cancel losses from their trading in crypto against their other business profits. Furthermore, it will ensure that people are careful with investing. Once they charge so much tax on crypto, only the people who are financially sound will invest in them. While some are for it, others will see the tax as a big blow to an industry that was just starting to thrive, as they see the disadvantages that will follow. People won't be allowed to set off their losses, hence they would lose their taxation benefits. Exchanges will lose volumes due to heavy taxation. Low volumes due to policies will also decrease trades, which in return will generate low tax to the government, low income for exchanges, and lower profits to traders. Various countries like the United Arab Emirates, Singapore, and Thailand have reduced their tax rates in order to become more crypto friendly. Therefore, investors feel that if the tax rate in our country is not reduced, then the industry will move to these tax friendly countries, and India may see a huge brain drain of industry workers. After the announcement, one of the biggest points of confusion which arose was whether this tax makes crypto trading in India legal or not. And the answer in the end was yes and no. The bill that will give crypto the ultimate legal status still has time to come, but the government is not waiting for that to happen before they start to tax people. In the end, it feels like the government has neither legalized nor banned cryptocurrencies, but it's made a move to discourage short-term trading. In a way, the tax puts an end to the constant uncertainty that plagued the crypto sector in India for almost half a decade now. With that, we come to an end of this topic. Thank you so much for watching. Please make sure to like, subscribe if you still haven't, and share the video with your families and friends. See you all very soon with a brand new video on a brand new topic.